Rumors are no longer just rumors. The whisper of focused economists has turned into open alarm in Berlin and other European capitals. In the past, German analysts only cautiously hinted at the gravity of the situation, buried in quiet columns of specialized bulletins. Today, however, headlines in Reuters, The Guardian, and the Financial Times are already stating that Germany is experiencing its most severe economic crisis in decades, perhaps even since the post-war economic miracle. Its export machine, once the engine of the global economy, has begun to falter. A second consecutive recession, with GDP contraction and a failure to return to pre-COVID levels, the only G7 country that has not restored its economy to prior growth. The industrial sector has been hit particularly hard. A slump in the automotive industry, dismal EV sales statistics, all compounded by high energy costs, labor shortages, and rigid regulatory barriers. The crisis deepened further after a new round of the trade war. Trump's tariffs struck Germany head-on. A new 15% tariff on European goods reduced Eurozone quarterly growth to a meager 0.1%, while Germany's economy contracted by 0.1%. Germans now say that Trump with his own hands and his trade war is strengthening his main geopolitical rival, since under this external pressure, Germany is being forced to reconsider its alliances. Meanwhile, China has nearly caught up with the United States as Germany's largest trading partner. In the first half of 2025, trade with China approached 122.8 billion euros, compared to 125 billion euros with the US. And thanks to the weak yuan and targeted exports from China, German imports from China grew by 10.7%, while German exports to China fell by 14.2%, creating a record trade deficit of 40 billion euros. The entire situation echoes the hints about de-dollarization that just a month ago surfaced in OMFIF institutes and in the behavior of central banks around the world. More and more countries are planning to increase the share of the yuan in their reserves. Among the leading trend currencies is the euro, but the strongest growth is clearly with the Chinese currency. As for Germany, its crisis has been building for a long time. Layer upon layer, energy dependence on Russia, nuclear plant closures, slow digitalization, bureaucracy, an aging population, political immobility on the debt brake. All this left the country vulnerable even before tariffs were imposed. But now the effects are piling up. Trade losses, export decline, industrial slump, falling business and consumer demand, together forming a threatening crisis cocktail capable of reshaping the entire structure of Germany's foreign policy and economy. And what is most alarming, Germans are gradually moving away from the dollar, increasing their euro holdings, but also more frequently considering the yuan as an alternative. Central banks are already discussing a new model of reserve diversification in which the yuan clearly plays a role. In the backstage of Germany's economic elite, a quiet thought emerges. Perhaps we are witnessing the formation of a new partnership between Germany and China. The political dimension only heightens the drama. In Europe, a clear shift is being felt. The US already calls Europe not just a partner, but rather a reluctant, pragmatic ally. Trump and his administration postponed tariffs on China by another 90 days, perhaps hoping to cool down the confrontation. But the price of this is a decline in German faith in the reliability of its allies. Meanwhile, Germany is seeking a way out. The finance minister has drawn up a massive investment package for modernizing the army and infrastructure against the backdrop of a new wave of NATO-related risks and declining confidence in American guarantees. Germany's financial and political apparatus is now balancing between the fear of further weakening and the desire to reshape its external economic course. Experts at The Economist are already warning, if Germany makes a final choice in favor of platforms outside the G7, if it dares to entrust part of its economy and reserves to the yuan, it will not just be a diplomatic rupture, it will be a signal to the entire world. The West is losing its monopoly and China is winning without firing a single shot. Reflecting on the scale of events, it is hard not to repeat the thought voiced in Berlin recently. Trump's goals and trade pressure are not just hitting Europe, they are redrawing the geopolitical landscape, and doing so with his own hands. But perhaps what we are seeing now is only the tip of the iceberg. Behind the scenes, a much larger picture is taking shape. Germany has found itself in a unique position. Its industry and export-based economy is cracking precisely at the moment when China is rapidly expanding its influence in Europe. Chinese delegations have been making frequent trips to Berlin and Frankfurt, offering German businesses preferential terms for joint projects. According to sources cited by Handelsblatt, several of Germany's leading carmakers are considering relocating parts of their production to China industrial zones, where labor is cheaper and market access is guaranteed by Beijing's state programs. This is unprecedented. If in the past, Germany exported technology to China, now China is beginning to dictate the rules of the game and pull the Germans into its economic orbit. Even at Deutsche Bank, scenarios are being discussed in which part of commodity contracts will be settled in Yuan, while German energy traders, for the first time in decades, have abandoned long-term dollar contracts in favor of the Chinese currency. This quiet shift is not just an accounting maneuver. It represents a fundamental transformation of Europe's financial architecture. On the political level, the situation is even more tense. In the Bundestag's corridors, blunt statements are being made. The US is no longer a guarantor of security, but rather a source of instability. After Trump declared that Europe has been freeloading on America for decades, his words in Germany became a symbol of a new rupture. Even those parties that traditionally leaned on the transatlantic alliance are now being forced to rethink their rhetoric. The Social Democrats have, for the first time, openly spoken of a multipolar Europe, while business leaders from Siemens to BASF are demanding that Germany stop waiting for favors from Washington. Insiders at the European Commission claim that Brussels is considering creating alternative trading platforms with China, India, and the Gulf states in order to reduce dependence on the US. Meanwhile, China is playing its strategy with great finesse. Beijing has offered Germany a special package of incentives, access to the Chinese domestic market for German automobiles and machinery in exchange for Berlin's partial shift to yuan-based settlements. Reuters has already reported that several pilot transactions for BASF chemical products were conducted in yuan, the first in history. This is not a detail, it is a signal. Germany is testing a new reality where the dollar is no longer indispensable. Germany's European allies are watching this shift with suspicion. Poland and the Baltic states warn that Berlin is once again playing its own game, recalling how Germany once dragged Europe into dependence on Russian gas. Now, they argue, Berlin is drifting into Beijing's embrace. But within Germany, the argument is simple. The country has no choice. If we do not go to China, we will lose entire industries, one German industrialist said at a closed forum in Frankfurt. The drama is amplified by US behavior. While Germany teeters on the edge of a new economic era, Trump suddenly granted a postponement of tariffs against China. For 3 months, duties are frozen to give negotiations a chance. But in Berlin, this was perceived as mockery. Europe's tariffs remained in place, while China was given a reprieve. German newspapers call it a stab in the back of an ally, and it is precisely this that accelerates Berlin's pivot eastward. At this point, it is worth recalling the words of one analyst from The Economist. Trump wanted to weaken China, but with his own hands he is making it stronger. He is pushing Europe, and above all Germany, directly into Beijing's arms. And this looks like the beginning of a new era, where traditional alliances collapse, and new ones are formed not on ideological grounds but on purely pragmatic calculations. And most importantly, this is only the beginning. Germany has not yet officially declared a strategic pivot, but the facts speak for themselves. Record growth in trade with China, transactions in yuan, high-level diplomatic visits, all against the backdrop of cooling relations with the United States. Perhaps we are now witnessing the formation of a new global alliance that will change everything, from economics to politics, from finance to the architecture of security.